Stocks are a wide swathe of green, with advances far outnumbering declines. Realty and auto are the big gainers, even as financials, FMCG, healthcare lag. The mid-caps outperformed by a wide margin.
Sources tell CNBC-TV18 that the government is leaning towards scrapping the windfall gains tax as it hasn't yielded much revenue, made industry unhappy, and has been hindering output expansion.
NTPC's Green Energy IPO, 10,000 crore rupees IPO issue opens for subscription today, following a near 4,000 crore mop-up from prominent anchor investors. The renewables major has an implied market cap of about 90,000 crores at the offer price.
Finance Minister Nirmala Sitharaman brushes aside concerns on growth slowing but calls for more affordable interest rates. She adds that the government is committed to taking steps to keep the economy on the growth path.
The government has cut dividend payouts to 4% from 5% of net worth of public sector companies, while also tightening criteria for buybacks, issue of bonus shares and stock splits.
Good afternoon. You're watching Halftime Report here on CNBC-TV18. I'm Hormas Patakia. Mangalam Malu is with me. And finally, we see some green on the screen and a very dark shade of green as well. Some relief coming in for the bulls. 23,750 is where the Nifty is, near the highest point of the day. The metals continuing, well, the metals are continuing to be in the green, but leading the gains today are the auto stocks, the IT names. The broader markets are doing well for themselves, and the Nifty Bank too, trading with gains of over 500 points. So good going for the markets, and it's been a while since we said that the mid-cap index is up 1,000 points after saying for days that the mid-cap index is down 1,000 points. So good going for the broader markets as well.
Extremely good going for the markets, especially given the sort of decline that we've seen for the last 8 trading sessions. Everyone on the street was hoping for some sort of recovery coming by, and that recovery has definitely come by. From oversold levels, we've seen a near 300-point recovery from yesterday's close for the Nifty. It's conquered the 200-day moving average. It's extending its gains, 1,000 points in the mid-cap index. It's important the Sensex gone up by 1,000 points as well. And the Nifty Bank is up around 1%. What's interesting, however, is that overnight we did see the Nasdaq cut its 4-day losing streak and end about 0.6% higher, and the Nifty IT is actually reflecting that happiness as well, returning that favor, because yesterday the Nifty IT index was the top drag on the index, and right now it's the top contributor, so up around 2.5% for that index, even as the Nifty Bank is up around 1% as well. Remember, yesterday the Nifty Bank did bat for the bulls, and now we have IT for the support, and alongside that we have a lot of these beaten down names which are doing extremely well. So the nature of the stocks which are moving higher tells you the mood of the market right now, because when there was a decline, we saw all the PSUs, we saw all the defense infra names, all of them take a leg down, and right now it is a bunch of these small cap names, PSU stocks, all of them doing extremely well. In fact, even the financials, if you look at it, we have a bunch of those names doing extremely well, not to mention that Reliance as well from lows has seen some recovery. But it's all about hospitality. At 12:30 we will have Puneet Chatwal speak about the outlook for the next few years for Indian hotels. But before that, let's talk about Lemon Tree Hotels, the first guest on our show today. The second quarter results, they were good. Why were they good? Because there was increased utilization of the Mumbai Aurika. The EBITDA margin also was good, limited by the 8 crore rupee renovation expense. So had it been for the underlying business, the company, it's done extremely well in what is a seasonally weak quarter for the hospitality sector. And more importantly, we enter into a seasonally strong H2 for the hotel industry as well. Patanjali G. Keswani, the Chairman and Managing Director of Lemon Tree Hotels, joins in to discuss these numbers and more. Mr. Keswani, thank you so much for joining in. And we've understood for the last couple of quarters, the expansion in utilization of Mumbai Aurika and the renovation that you are doing for a lot of your rooms has actually impacted the performance. But despite that, the underlying trend remains strong. So to that extent, I would like to ask you, the second half of this year, how does that look, especially when it comes to finishing the renovation and increased utilization of the Aurika?
So I think second half will be much, much better than the first half, both from the occupancy perspective and from the average room rate perspective. Aurika will do much better in Q3 and Q4 than it did in Q1 and Q2, because we were still in the midst of churning our segments, our customer segments in that hotel. As far as renovation goes, we were renovating about 25% of our inventory. And most of those rooms have come back except the Keys portfolio, where we will continue to renovate it for the next 18 odd months till we complete the entire portfolio of Keys, which is about 1,000 rooms. So we've tried to keep the rooms open and the cities where there is maximum demand and highest pricing power. And those will obviously now reflect in our P&L and revenue for H2.
Mr. Keswani, good afternoon. Thank you so much for joining in. If you could share the occupancy levels as well for Aurika, how were they in the second quarter and what are the trends that you have seen in the first month and a half for this current quarter as well? And if you could share a number for what you expect to end the year with.
See, in H1, we did about 60%, which is about 340 rooms in Aurika, Bombay. And in H2, we will be north of 60%. Which is basically north of 400 rooms. Now, exactly what that number will be, I cannot comment on, but it will be, as I said, much higher occupancy than in H1 and also a higher room rate.
Right. So, you said that H2 overall will be much, much better than H1. Would you hazard a guess as to what that much, much better would look like when it comes to the numbers itself?
See, normally, depending on the hotels that one has in the portfolio, seasonality can be can have an impact of as much as 60-40 winter-summer. But because we have many hotels in business destinations and so on, where the seasonality is a little less, we have more, typically we have 55% in winter and 45% in summer of our revenue. Okay, which means 1.2. But I reckon this year it will be closer to 1.3, which means whatever we do in summer, we should do about I shouldn't say 1.3, I'll say 1.25 to 1.3 times that revenue in H2.
Right. So first half you've done about 550. I just multiply that by 1.25 or 1.3. You end up with anywhere between 1,200 to 1,500 crores on the top line. With improved margins as well. Yes, go ahead.
That's a very wide range. So I would say we would do about 700 crores in winter, plus minus. So, which means 1,250 odd crores, maybe even 1,275.
And what about the operational performance? Because now the renovation expense is mostly done. You have increased occupancy. So I believe the delta there would be probably more than this 1.2, 1.3 that you're talking about.
Yes, operating leverage is obviously such that your costs are fixed in winter and summer. In fact, some of your costs come down in winter because your power and fuel expenses are not quite so much because it's not so hot. So most of the incremental revenue will flow into your EBITDA.
And if you could share levels as well for margins, Mr. Keswani, you ended the first half at around 44 and a half. Would you expect to remain at those levels by the end of the year, or do you see an uptick? Maybe north of 50.
Yeah, in winter.
Interesting. And I wanted to also ask you about your management fees. For the second quarter as well, your management fees went up by around 32%. What do you expect? Do you expect that to trend northwards as well in the second half? Is there a targeted number that you have for the full year?
See, it's like this. I expect management fees, excluding our Fleur hotels, that is third-party hotels, to be between 65 to 70 crores this year. But because we have signed a whole lot of new hotels, without getting into a quarter by quarter or half year by half year growth, my broad expectation is that in the next 2 to 3 years, we will be 2.5 to 3 times this number, which means we'll be between 150 to 200 crores of management fee income from third-party hotels, excluding the Fleur portfolio, which we also manage, where we are the largest shareholders.
And Fleur would be how much? Because this quarter as well, Fleur did about 13.5 crores in terms of fees. So now that we have 150 to 200 crore coming in from your own third-party hotels, Fleur, how much could that be?
No, we have third-party hotels are not owned by us. So
Okay.
what I said is in the next 2.5 years, the hotels not owned by us will give us fees of 150 to 200 crores. And by then I expect Fleur would be also in that zone, 150 to 250 crores.
So
So
roughly
basically the two put together would be 350 to
300.
400 crores of fees.
Got that, got that. Thank you so much for joining in, Mr. Keswani. We'd have loved to have a longer conversation with you, but we'll leave that for some time in the middle of the quarter, where you'll have more details on how the third quarter has been panning out as well, just before we move into the holiday winter season as well. For now, we'll be happy with 1250 crores on the top line, 50% plus in terms of margins, and expected nearly 350 to 400 crores coming in from management fees, including Fleur, over the next couple of years. The stock holding up well in the green. With that, we take a short break, come back on the other side. We'll get you an exclusive conversation we had with Peter Elbers, the CEO of Indigo Airlines, on the sidelines of the CNBC-TV18 Global Leadership Summit.
Welcome back. Now on the sidelines of CNBC TV18's Global Leadership Summit 2024, Indigo CEO Peter Elbers told CNBC TV18 that they are confronting enormous pressure on supply chain but have managed to turn the corner now. Our colleague Madiha caught up with him and spoke to him on the loss that it reported in the second quarter, the supply chain issues and the grounding of the aircrafts and the current situation that is prevalent. Listen in.
There's a couple of factors. First, we came out of COVID, and indeed, Indigo rushed out of COVID. And I joined in the summer of 22, right after COVID, and we've been able to expand and build on that. And that led to 7 quarters of very solid profits, helping us to deal with the losses of COVID. I think a few things came together in the second quarter. Additionally, a weaker quarter. The weakest quarter of the year is that Q2. Secondly, for us, we have been confronted with the enormous pressures on the global supply chain, and that has led to a significant number of planes on the ground for Indigo. We've taken a lot of mitigating measures to deal with that. We had extended leases, we took a few leases, we took a few older planes back. That has enabled us to keep our growth, to keep serving our customers. But of course, there's a price tag to it. So that all sort of accumulated in that second quarter. What we have seen now is we've turned the corner. The number of planes on the ground gradually will start to come down. The season, of course, with Diwali, Q3 is always a different thing. So actually, for us, it was also a moment where we turned the corner in terms of number of planes on the ground.
Yeah. You mentioned AOGs. So how many aircraft currently are on ground and how many are operational?
The worst today, Indigo has a little over 400 planes. I mean, back to one of your earlier questions, 400 planes is a lot. But looking to the large airlines of the world, we still have a way to go. And again, if we are 27, India is going to be the 3rd largest economy of the world. That requires planes. So that is sort of justification for our fleet order. So today we have a little over 400 aircraft. In the worst point in time in Q2, we had in the mid-70s in terms of number of groundings. That's an enormous number. I think a lot of airlines in the world would have been really into a bad shape because of that. I think at Indigo we have managed actually quite well at the price, but we've managed quite well. That number has gone down. Today we're sub 70, so we're somewhere in the 60s, and we expect that number to go down gradually, and by the end of the year it should be really below 50.
All right, interesting conversation there with Peter Elbers. What we'll do is take a short break, come back, get you trading ideas on the other side. A lot would want to know whether this dip is worth buying into, or this recovery is worth buying into or selling into. We have Sachidanand Uttekar of Trade Bulls joining in after this short break. Doing extremely well for the markets. 305 points for the Nifty, 1,000 points for the mid-cap index, 1,050 for the Sensex, and Bank Nifty up around 529 points as well. So if you just take a look at the way the markets have moved and talk about the way the F&O system is positioned right now. Strong recovery from yesterday's lows. The Nifty is done well. Nifty Bank, you have to have the Nifty IT index come up as well out there. That's the key driver for the markets in today's trading session, and broader markets have done a lot better. So even as the Nifty is up around 1.3%, Look at the mid-cap index is up 1.8% and small-cap index a step higher by about 2% as well. And that's reflected in the way the market breadth has moved through the course of the day as well. 2,100 stocks advancing for about 300 stocks which are declining, which tells you that, through the course of the day, the red and green lines have been far apart and only widened, as the day progressed. So let's see where that ends as well. All of this gives confidence to the bulls. What also gives confidence to the bulls is that the Nifty has surpassed the 200-day moving average and is now comfortably above it. And the Nifty IT index, which was under pressure yesterday, has surpassed the 50-day moving average as well. Along with that, a lot of short positions in the system calls for further up move in the markets because of short covering. And that's what we've seen if you look at the futures plate of both the Nifty as well as the Nifty Bank. This is the November futures that I'm talking about that comes up for you on the screen. You see the Nifty futures on November has seen an open interest decline of almost 80,000 contracts. Nifty Bank November futures comes up for you. That too has seen a decline of almost 80,000 contracts, telling you there is short covering in both Nifty as well as the Nifty Bank futures. And add to that, the India VIX is lower. So you have short covering taking place in index futures, lower India VIX telling you that there is more put writing and unwinding of calls. That's exactly what's playing out. 23,500 call writers were very active yesterday. Now they're covering their positions. 23,600 call writers who were extremely active yesterday, again covering their positions, causing further up move for the markets. And on the other side, we have 23,600 and 23,700 put writers equally active, taking the support higher back to that 200-day moving average of the Nifty at around 23,550 itself. On the way up, however, for the market to sustain its up move and see further short covering, we have to cross past that 24,000 mark. Why do I say that? Because the call writers at 23,900 are still active, and that's something we'll keep an eye out on. And tomorrow we have the binary event of the Maharashtra elections as well, so we'll keep an eye out on all those things. Fin Nifty will be the index to watch out for. It's the last weekly options expiry today. It is at 23,430. Where are the options placed? 23,450 and 23,400. So after this 175-point move that we've seen, maybe the Nifty Financial Services will not move beyond this range of 23,450 to 23,400 itself. One stock I'm watching out for was the stock of yesterday, will perhaps be the stock of today as well, with a down tick of almost 1%, is IGL, may enter F&O ban, so keep an eye out on that one.
Well, call it holiday cheer, call it short covering, to each their own, isn't it, Mangalam? Thanks a lot for that. Let's pose that question to Sachitanand, the taker of Trade Bulls as well. Sachitanand, good afternoon. Thank you for joining in. Would you read this as the start of a sustained recovery on this index, or would you use this bounce to reduce your positions?
Good afternoon, almost. Good afternoon, Mangalam. I think clearly there has been a change in sentiment. If you look at the last couple of trading sessions, the Nifty was challenging that support at 200-day exponential moving average, which is placed at 23,500. Now, this particular support is significant because it is also the moving average support plus the declining channel that we have been observing on the daily scale. The pattern support is also placed there. So we were chasing this particular fall, and I think this is the last leg of within this particular channel pattern, which was showing some signs of exhaustion. There was a positive RSI divergence, which is also a good sign that market was losing its momentum on the downside. So I think this particular move, which has been primarily led by short covering, may extend. And the level to watch out on the higher side is placed somewhere close to around 24,080 on the higher side. The floor is very well set at 23,600 now. So unless we don't see the Nifty trending below that 23,600 mark, the trajectory or the bullish momentum may just continue and push the Nifty higher towards 24,080. When it comes to Nifty Bank, the challenge is at 51,300. Before that, we don't see any major hurdles. But the support at 50,500 is still not that very confident. So I think Nifty Bank may remain range bound, but the move in Nifty could extend towards 24,080.
All right, Sachitanand, thank you so much for joining in, sharing with us your views on the index. But if you could quickly put in your specific stocks as well, due to paucity of time, very quickly.
Two calls, both on the long side. Coforge, it has been one of the strongest stocks within the IT pack. It is still showing a continuation pattern. There's a bullish flag formation which has broken out. The pattern is indicating a target of 84.60. from a trading perspective, we may see an immediate swing towards 83.30, and that's why we are recommending building long positions with a stop loss at 81.40. The other stock is HDFC Bank, clearly one of the strongest leaders within the Nifty pack. Even here, if you look at the way it has responded to that 1700 support, it looks like a higher bottom in place, and that's why we believe that keeping a stop loss at 1708, one can still chase momentum. The immediate trend target is placed at around 1840, but from a momentum perspective, we may see this move quickly, scaling towards 1780.
All right, Sachi, thank you so much for that. We take a short break, come back on the other side. We discuss pharmaceutical space. Amit Chalke of JM Financial joins in from the sidelines of the JM conference to talk about the Indian healthcare sector. Stay with us.
Welcome back. Now shifting focus to the pharma sector, JM Financial in their recent note has preferred stocks like Dr. Reddy's, Aurobindo, Ipca Laboratories, JB Chemicals and Pharma as their top picks. To discuss more on these and the sector outlook, Amit Chalke, the pharma research analyst at JM Financial, is joining in from the sidelines of the JM Financial India conference. Amit, good afternoon. Thank you so much for joining in. How would you summarize the quarter gone by for these pharma companies, right? Because every company has a unique identity of their own. Everybody has issues of their own. How would you summarize the quarter gone by, and what's the road looking like for the second half of the year?
Yeah, hi. Thank you for giving me an opportunity. So, quarter has been fairly, all the companies have fairly done well, at least in the pharma sector. And most of the companies have reported beat on the street's numbers. So going ahead, we remain positive on the outlook of the pharma sector, led by the strong earning momentum these companies have, at least for next 2 to 3 years. However, at the same time, we believe that investors should remain cautious about the product concentration risks in most of the large cap companies particularly. And obviously we like Dr. Reddy, Aurobindo and Sun Pharma on account of one, obviously the product concentration risk is likely to be lower on beyond FY26, and the structural tailwinds which are there, which could keep on driving the earnings growth beyond FY26. And also the valuations on the core multiples are much more attractive compared to the other large caps.
All right, as we speak, as on cue, after some decline yesterday, some of the pharmaceutical stocks have been coming back. Among the top Nifty gainers is Dr. Reddy's with a gain of almost 3%, and it is among your top picks as well. Over the last couple of conversations that we've had with the pharmaceutical companies, two stood out. One was Glenmark, was among the big gainers in yesterday's session, and the other one is MedPlus. There were a bunch of large trades on that one. The management assures that for now the shareholding pattern is likely to stay stable, and they are fairly positive on the way they would go ahead and increase their share of revenue coming in from private labels. I wanted to know if you track either of these and you have a view on them.
Unfortunately, I won't be able to comment on both these names, as we don't cover and we are not allowed to speak on those names.
All right, no problem. And otherwise, is there any stock that you like in particular more than the others that you've given in your top picks?
We favor Dr. Reddy's. It is benefiting from Revlimid opportunity, like everyone knows. Companies likely to generate more than 15,000 crore free cash flow led by this opportunity. And they are reinvesting this opportunity in adding EPS accretive businesses. And at the same time, there are several levers which are there, like the biosimilar launches, GLP-1 product opportunities. They are also developing their CDMO business. Consumer business is also getting enhanced going ahead. It is expected to become $1 billion in 2 to 3 years timeline. So there are several triggers going ahead. At the same time, the valuation on the core multiples is one of the cheapest among all 6 large caps. So that's why we like Dr. Reddy's, and we have around more than 8,000 target price on the name. Yeah.
What about IPCA, Amey? You have mentioned that it is one of your top recommendations as well, and there was a lot that was expected from it considering the acquisition that it did with Unichem, and you are also mentioning that the synergies are yet to fully materialize. By when do you expect that to fully happen? Because it's been a while, right, since the acquisition took place, and it's almost time now for the numbers to be delivered.
Yes. So if you have seen post acquisitions, the gross margins have moved up. So they have partly realized the synergies. The gross margins have moved up almost 4% since the acquisitions. You have also seen how the profitability for Unichem has also improved post acquisitions. However, there are several things which are yet to play out, like they are going to see a cross pollination across geographies. They are also taking the benefit of US product portfolio, where IPCA would be launching a lot of products through Unichem's front end. So there are a lot of these synergies are expected to play out over the next 2 to 3 years, and that is not yet priced in my view, at least on Street's numbers. And that's why we remain bullish on IPCA, because of all these structural tailwinds which are likely to drive almost 25 to 30% earning growth over the next 3 years.
What about JV Chemical and Pharma? I remember the management joining us multiple times here and saying that the opportunity for them lies more in expanding their branded portfolio and their India business itself. But the overhang out there is that of a possible deal. Would you weigh in on all these parameters and then give us your call on the stock?
So structurally, the business has changed since the new management has came in. It has started delivering really good growth on the India as well as ex-India business. So if you have seen before the new management came in, the growth used to be sub 10% across all geographies. But now, since the new management and the KKR has came in, they have delivered almost 18% growth over the last 4 years. And we believe even if anything changes on the promoter front, the management is likely to continue, and this the earning growth and the top line growth for the business is likely to continue for next 3 years as well. So the company is on the right path, and investors should benefit from that, in my view.
Do you have any estimation of the timeline of this? I mean, KKR holds stake. How long are they likely to hold it? Is there a fund, life, etc. that is? And the probability of it being bought up by some strategic or maybe another financial institutional investor itself?
It's at present anybody's guess that what is going to happen with the KKR stake. It won't be right from my part to comment on the same. Yeah.
All right, Amey, thank you so much for sparing time and joining in. Wish you good luck for the conference going forward as well. That was Amey Chalke of GM Financial. Time for a short break. Up next, we get to an exclusive conversation with Amit Agarwal, the CFO of Raymond, on the sidelines of CNBC-TV18's Global Leadership Summit. Stay tuned. Welcome back. Now on the sidelines of CNBC-TV18's Global Leadership Summit, Amit Agarwal, the CFO at Raymond, said that all their businesses are growing very well and the company is seeing good traction since the beginning of the festive season. My colleague Shilpa Ranipeta spoke to him about the growth outlook, the festive season demand, and how is the wedding season shaping up.
I think we are all headed for the Viksit Bharat in 2047, which is our mission from the Prime Minister Modi ji. And we completely believe that in all our businesses which we have, be it the lifestyle, which has been the clothier for 100 years, to the men, be it the real estate or the engineering business, which the Make in India, I think all three businesses are firing very well, and we see a significant growth across our businesses as well as to contribute to the nation's journey.
Right. How do you view the current, economic consumer sentiment scenario, and a lot of talk about a slowdown in urban discretionary demand, urban demand in general, especially led by metros, right? So how are you viewing the current scenario? Are you also seeing that on the retail front for you?
See, if you would have asked me this question, let's say 45 days back, I would have echoed exactly the same sentiment.
Okay.
But I think since the beginning of October, what the Diwali, Dussehra, and the ensuing wedding season, what we are seeing. I think the consumers are flocking to the stores. Everybody, there is a lot of jubilation that I want to buy, spend money. And we are seeing a good traction now, at least for the last 30, 40 days.
Right.
And let's see that it continues.
And the wedding season, you hope that will be a bumper for you this time? What's the kind of growth that you're expecting from the wedding season?
So wedding season, what we cannot say right now, because it is just the people are starting to shop. You know, since yesterday the wedding day has started, auspicious day. But I believe that what we have seen, that the year on year at our distribution secondary level, at our TRS stores, there's been around 14-15% growth compared to last year.
Okay.
So that's something which is very heartening.
The management of Raymond there on the sidelines of the Global Leadership Summit. Time for a short break. On the other side, Manisha Gupta joins in with Sandeep Bajoria, the CEO of the Sunwin Group. Stay tuned, we'll be right back.
Welcome back. Joining us on the show now is Sandeep Bajoria. He's CEO at Sunwin Group. Mr. Bajoria, thank you for joining us. And soybean continues to be quite in headlines because of various reasons. But I want to start with on what it is Maharashtra elections this week now, tomorrow rather, and farmers are going to be an important sector within this. With the way the prices have been and a high crop, not just in India, but globally as well. These statements coming around from BJP promising 6,000, Congress promising 7,000, while the MSP is at 4,892 or thereabouts and the price is at 4,200. How are you looking at all of this maths?
Manisha, this is election time and rally time. So everybody's trying to be one up on each other. And as we saw, farmers' distress is there because of the soybean prices in Maharashtra. That MSP is 4,892 and they're not even getting MSP. Although government through its NAFED is trying very hard to procure seeds from farmers, but because of the higher moisture, it's becoming difficult for NAFED to procure because moisture content was 12, 14, 15. But now only 3 days back, government has relaxed the moisture content thing from 10 to 15. So that's going to help NAFED to procure now strongly. And that is at the support price, what is existing today, 4,894.
Sure.
What we saw was Congress party demanding 7,000 rupees for soybean, and Prime Minister in last week in the rally in Vidarbha said we will give 6,000 to soybean. So what Prime Minister says is more weight than anybody else. There's no question about it. But 6,000 when? This season or next season? That is not clear, number one. And number two, meanwhile, yesterday the statement came from Mr. Shivraj Singh Chauhan, our Minister for Agriculture, that they'll give a bonus of 5,000 rupees per hectare on soybean. So that amounts to something around 400 to 450 rupees per quintal on the seed. So that means if 4,892 is MSP and they give this kind of a bonus, then farmers should be able to get 5,392 or something. That should be the right way if NAFED start procuring properly and if the Union Ministry of Agriculture giving this special bonus of 5,000 rupees per hectare, then ultimately farmer will get that. But it's a long way. We'll have to see in next few days how things go ahead. And there's a lot of confusion because of this. And meantime, there's one more demand which has been kept pending with the Union Minister, Shri Amit Shah, who is also Minister of Cooperation and who is the chairperson of the group of ministers, that oil meal export should be incentivized properly, and there should be at least a 10% incentive on oil meal export to take care so that depressed meal prices can be addressed. So I believe that also matter in interministerial committee, that matter would be taken up this week, I believe. And let us hope some decision on that comes. Because see, what is happening is, ultimately, if you give MSP high price to farmers, good enough. But ultimately, you have to keep the economic wheel running.
I get your point, Mr. Bajoria, because you can't make a standalone policy. Your point is well taken that all policies need to be interconnected in some way, especially when it comes to that crop. I also want to get your sense on if all that is being promised is not given in this season, but the next season, how does that change the economics of farming in Maharashtra and India?
See, I believe farmer definitely is to some extent will remain disappointed if they are not able to get good price this season. And for next season also, if it is incentivized and they say, okay, then probably about farmer, but seeing is believing. That's more important, I believe. The farmer will really see that this 6,000 rupees announcement, whatever notifications required are put into place. And I think the Kharif MSP for next year will be coming out by March or April. So they will see, and accordingly they will sow, and they will think how much sowing we should be doing.
So, Mr. Bajoria,
now,
the statement from PM, until there is no notification in that sense, you're saying it doesn't hold any validity on ground, right?
No, I mean, once PM says it has got all seriousness into it and the ministries are going to act on it, there's no question about it. But there is a slight confusion whether when PM has said whether it amounts to this season or next season.
Okay.
That is what it is. And however, I'm confident the government through NAFED is seriously going to do something for the farmers, and they will strongly procure at MSP. And 5,000 rupees per hectare bonus also will come, which Union Minister Agriculture has announced. I think this will help farmers, but ultimately you need to get this seed crushed and meal exported. So for that, export incentive to the meal is very, very important. I think that also should come this week. Then some kind of a movement in the cycle will be seen, or otherwise confusion confounded.
All right, Mr. Bajoria, thank you so much for sparing time and joining us this afternoon. Manisha, thanks a lot for joining in as well. With that, it's a wrap on this edition of Halftime Report. Business Lunch takes the action forward.